Good morning. Thank you for joining us this morning. My name is Marcus Solar. I'm one of the annuity directors here at Insurance Agency Marketing Services. Wanted to thank you all for joining us this morning. We have a great partner on the line with us this morning. We have a great partnership with Nassau Re. We have Jake Quigley-Aroli with us. I hope I did not do harm to your last name there, Jake, but I'll call you Jake Q from now on out. But we do have Jake on the line with us from Nassau Re. We are going to be covering the entire portfolio of products from Nassau Re. They bring industry-leading products to the industry for income growth and the personal protection choice for those long-term care needs down the road for your clients, especially in today's environment with COVID going on and people's concerns around health and long-term health illnesses and how that might affect them long term. So great products, great solutions for your clients for their needs now and into the future. Jake will be covering that entire portfolio of products here in a few minutes. I want to cover some of the value adds that insurance agency marketing does bring to the table up front. As we do cover this information, we are going to be covering a lot of it this morning in the next hour. What I do ask is if you do have questions, please go ahead and type that in the question box. We are going to try to cover those questions as we go through. We also will be asking for questions at the end, and we'll try to answer those as we go. We do have this recorded this morning, so if you do get pulled away for a client meeting or a phone call and you do miss some of the information, feel free to let me know. I can get you a copy of the webinar this morning so you can listen to it at your own convenience after the broadcast is finished. Again, my name is Marcus Solar. I do appreciate you taking time to listen in this morning and learn about the Nassau Re products and the great partnership with Insurance Agency Marketing Services. Let's go ahead and get started this morning. Insurance Agency Marketing Services has been in business now over 30 years. We do bring to the table our new producer builder program, our new producer bonus program. It is a way for us to start your business and the partnership with Insurance Agency Marketing. We have anything from 100,000, and what counts towards this program is either single premium life or annuity production, in paid production for the first 6 months you're with us. All that premium does count towards this program. Anything from 100,000 to $1 million in production. You can choose anything from a 1,500 piece postcard mailing, $750 cash back, all the way to preset appointments, 8 to 10 of them to keep your pipeline full. Again, it's a way for us to say thank you, welcome aboard. We're looking for a great long-term partnership, and we're looking to invest in your practice and help you and your practice grow. We do also have the IAMS Business Builder, which is a way to increase your capital long term. We do understand that it is very important to you and very expensive for you to run your business. We do have the referral producer program, a way for you to earn some additional marketing dollars to help offset costs. We also have the marketing reimbursement for both annuity and life business. For an example, for every 100,000 in indexed annuity premium that you write through us on an ongoing basis, we put $100 into that marketing account for you. You can use this for any offset for any expenditures within your office. Again, we like to share in those expenses going forward. You also get offset for life and single premium life as well. Those numbers are on the screen. If you have any questions on this, you can certainly reach out to any of the annuity directors or life directors here at Insurance Agency Marketing. They'd be able to help you and answer any questions for you with regards to this program. We do have some of the best back office support in the industry. We have years of experience here that can help you out with either upfront case design. We do have attorneys on staff. They can help you out with forms, supplies, back office support as far as helping you process new business, contracting up front, e-applications. We have Firelight on the e-application process, and much more. So we can help you from a coaching standpoint up front, all the way to helping you process your applications on the backside of your business. Again, we do have Firelight available to you. It is a way for you to do the e-application process. The nice thing about the Firelight system and going through the Firelight system, we do offer a number of different carriers. The carriers listed are the ones on the left side. We are getting new carriers each and every day added to this system. We are looking to getting 2 or 3 more, I believe, here in the next couple of weeks. So please stay tuned for that. But the nice and positive thing about Firelight is as you go through that system, it does not allow you to miss a box or an item. So it saves on any mistakes for you having to go back to your clients at that point in time or revisit your clients at that point in time. Thus, your business gets processed faster, the policies are sent out quicker, and you are paid much quicker on that business. Again, if you have any questions on this, you can certainly reach anyone here in the office at Insurance Agency Marketing at the number listed below, and they'll be more than happy to help you out in registering for that program. We do have one of the best creative marketing teams within the industry, in my opinion. Curtis Hawks is in charge of that department. Jacob Tedlock and Sean Crawford also work within that department as well. They can help you anything from if you're just getting into the business and you need help with logo, envelopes, some type of business design, letterhead, all the way to if you've been in the business 15 or 20 years and you want help with some green screen for TV or advertising for radio, we can meet you there and take you to the next level. So anything from digital solutions, handouts, professionally written or postcards, social media consulting, this team can certainly help you out with those needs. We do have the IAMS website, which is available 24/7, that can help you out with any forms. We do have quoting out there for annuity and life. We also have industry links out there. It's always accessible for you after hours and on the weekends. So anything you need is at your fingertips when we aren't here in the office. One thing to keep in mind, here at Insurance Agency Marketing Services is we do have those 3-ring guarantee that during normal business hours, you call into the office. We do not have voicemail here. Every call coming into the office is answered by a live person, and we are here to help you. We know if it wasn't for you folks out there in the field, it wouldn't be for us here in the office. So thank you for your efforts. We are here to help you in any way we can. We do offer to our advisors Retirement Analyzer. Retirement Analyzer is our retirement income planning software. It is to help your clients forecast for their retirement income planning needs. It does help you and your clients answer several different questions. What happens if there's a catastrophe within the family hierarchy and they lose the primary income person within that family? What would happen with the rest of the family at that point in time? Do they have enough life insurance? How would it affect their family if there was an accident and one of them were to enter into a nursing home? So a lot of these questions can be answered within this software. If you are contracted and writing through us, we do offer the base software package to you absolutely free. We pick up the cost for that. You can, for additional costs, get this customized to your business logo. So it looks like it comes directly out of your agency. If you'd like more information on this, you can certainly contact us here at the office at 1-800-255-5055 for any additional information on Retirement Analyzer. We do offer IAMS Wealth Management. It is a choice for financial advisors. If you are considering getting your 65, so you are not leaving any money on the table, it is a way for you to deepen your client relationships, build revenue within your practice, and strengthen your client retention. Please give our office a call and talk to Charles Hearing Jr. or Mike Hansen. They would be more than happy to answer any questions you have with regards to that side of the business and answer any questions you have with regards to getting your Series 65 license. We do offer the Annuity and Life Academy. It is an industry recognized event. This event is co-sponsored typically by a carrier. Either in the past, it's been co-sponsored by several different carriers, but the important thing for our advisors is that there is no cost to our advisors. At this point in time, we're trying to get another date here in 2020. I don't know if that's going to work out with regards to COVID, but the important thing to remember here is we typically bring in 4 of our top producers, multi-million-dollar producers. Not only do they share with participants in the room their prospecting methods, what they do once they get the prospects in the room, their entire sales process, what they do with their office staff. So from A to Z, everything within their office, they share with the participants in the room. We also talk about advanced annuity sales topics, advanced life topics. We talk about retirement analyzer. We talk about wealth transfer tools. We talk about industry best income writers. We talk about what we see as far as trends coming within the industry. So really, there is no untouched topic within this event. You also get the opportunity to spend one-on-one time with these top producers. So if you're really looking to leapfrog your agency and really not make the same mistakes they did along the way, this is a great opportunity for you. Again, there's no cost to the advisor. The cost is co-sponsored and picked up by Insurance Agency Marketing and the co-sponsoring carrier. If you'd like more information on our industry recognized Life and Annuity Academy, please give us a call at the number listed below. At this point in time, what I'd like to do is change it over to Jake. Again, we have a great partner in Nassau Re. They do have some revolutionary products within the industry with some great income riders attached to their product line as well. What can I say about their product line? They have one of their income riders on their product, and Jake will get into this more. And he'll touch on it as well. I mean, we've seen the market up and down like a bouncing ball. Some of us have seen clients still have not recovered from that. And these bonuses and income riders really give you the opportunity to go out there and make it right with those clients at this point in time and really position them to get ahead here in the next few years. So I'm going to go ahead and turn this over to Jake. As I said previously, if you have questions as we go ahead, please ask them as we go along. We'll try to answer those as we go. So Jake, I'm going to go ahead and turn it over to you. I do appreciate you taking time and spending it with us today. And I'm going to switch this over to you at this point in time.
Awesome, Marcus. Well, thanks for the intro, and thank you for the floor here. It's hard to believe we're Thursday, August 13th already in this crazy year. Definitely appreciate the partnership. Appreciate everybody on the call today. Appreciate you taking time to join us on the presentation today. We're going to cover a lot of things, but first and foremost, I guess I got to ask Marcus. You talked about that Life and Annuity Academy. No stones go unturned. So hopefully you talk about the most knowledgeable and best looking wholesalers out there as well. Hopefully that's a topic that's covered, and I'm sure I'm at the top of the list. But in all seriousness, I do thank each and every one of you for taking time to jump on the call today. As I mentioned, Nassau has built a great partnership with Insurance Agency Marketing, and you can see the reasons why. All of the great tools and resources IAMS has to offer you to help put value back into your business. Nassau has been a newer partnership with Insurance Agency Marketing. We've really just sort of started scratching the surface together a little less than a year or so. We've been partnered together under sort of our new leadership, our new ownership on the Nassau side of things. I've had the pleasure of working with IAMS for well over a decade in some capacity, so nice to be able to bring the Nassau portfolio there. One of the things you're going to see at the end of the presentation today, though, Nassau has rolled out what we call our Elite Advisor Program. And for your partnership with Nassau through Insurance Agency Marketing, one of our preferred partners, all production that you submit on the FIA side in August and September is going to qualify double qualifying credits as part of this program. And you're going to see a very attainable number for some real value to put back into your business. But let's keep things moving. A couple of things that we're going to talk about in today's presentation. First and foremost, I'm going to give you a quick 60, 90-second high-level overview of Nassau and where we're going. From there, I'm going to jump into really the top 3 selling products. I'm going to go into some detail on one of them, but more high level, if you will, because you've got a great team over at IAMS to really spend some time, put together case designs, customized illustrations, all the stuff that needs to be done on that front. From there, what I want to do is show you a couple sales practicing ideas. Marcus mentioned about COVID and their life and annuity sort of seminar training programs. What I found, and I'm sure many of you on the phone on the call have as well, is the biggest challenge from our perspective has been keeping that pipeline filled, keeping it filled with prospects. So what I want to do is spend a little bit of time and show you how I have advisors successfully positioning products, some different maybe sales ideas to open up new opportunities with clients, open up new markets, and really show you what's been successful. And then we're going to wrap things up by quickly running through 3 of the virtual programs that Nassau has on the portfolio that are actually being used. And then again, wrap up by talking about the Elite Advisor Program, which again, with your partnership with Nassau through IAMS, gives you access to this program, gives you access to our entire portfolio, as well as the opportunity to qualify for that Elite platform. Jumping back to step 1, though, a little bit of everything that we're going to talk about today is being written on Nassau Life and Annuity paperwork. What you're going to see, or hopefully you uncover as you continue to build a partnership with Nassau, is we are a company with a rich heritage, but a new beginning. First and foremost, you can see we've been around for almost 170 years, in business since 1851. We insured Abraham Lincoln, so we've been doing this for a long, long time. In addition to that, you can see we have nearly 500,000 policies in force, and actually today, over $24.5 billion in assets under management. In 2016, we talk about that new beginning, and this is where Nassau has come into play. 2016, Nassau Life and Annuity was purchased from at the time, Phoenix Life and Annuity Company. And from 2016 until today, we've continued to operate, continue to write business. But again, Nassau has put the company through a major transformation. You're going to see when we talk about it on the product side of things, new product inside of our portfolio, enhanced competition, enhanced competitiveness. You're going to see what we talk about from a transformation from an operational standpoint, the launch of our Nassau Elite program, a suitability decline rate currently of less than 2%. So we're getting business in-house and we're issuing that business. And most importantly, transformation from a financial platform. Nassau has put the company through a major sort of transformation on that front, investing capital back into the company from a product standpoint, an operational standpoint, and a financial standpoint. And actually back in May of 2019, Nassau received an upgrade from AM Best. As far as I'm aware of, only 3 insurance companies that have received an upgrade over the last several years. So again, what it's showing you is everything that Nassau is doing is continuing to move the company in the right direction, and we're getting that third-party affirmation with that AM Best increase. Now let's transition. We're going to do a product overview. One of the things that drew me to the Nassau portfolio was sort of the broad range of solutions that the company offers from a product standpoint. So often you see with carriers, they have products that sort of duplicate themselves. So you see a portfolio of 10, 15, 20 products out there, but there's really only 2 or 3 that you're focused on selling because they do what all the other products do. What you're going to see with the Nassau portfolio is with our 3 products, we're able to address several different product needs or risks that a client or prospect that you're working with might have. First and foremost, as I like to call it, your bearish clients, or clients that are looking for guarantees. We have one of, if not the top guaranteed annual lifetime income product in the marketplace today with our personal income annuity. We also have what I call sort of the Swiss Army knife, a product that has continued to build momentum and is really sort of taken the next step from a production standpoint as we've sort of continued to move through this pandemic timeframe. And that's the Nassau Personal Protection Choice, a product that's going to provide income, care, as well as death benefit protection. But last but not least, and the newest product inside of our portfolio is more for your bullish clients. Your clients who are still looking for that FIA protection. They're concerned about volatility, being an election year, being a market that we continue to have no idea whether we're going up or down despite sort of the increases that we've seen recently. But that client is still looking for that upside potential. Well, that's where we're going to enter the Nassau Growth Annuity, an index annuity that was really just recently designed. We've rolled it out. It's been out for a little over a year now. But what I want to do over the next couple minutes is show you some of the great differentiators with this product, some of the strong upside potential and opportunity that you have with the Nassau Growth Annuity. So let's dive in first and foremost. And what you're going to see as we talk through the portfolio is I'm going to use the words sort of flexibility, peace of mind, several times throughout this presentation. And it starts with the Nassau Growth Annuity. You can see that this product from a flexibility standpoint gives you and your client the opportunity to elect between two different contract durations. Now, Marcus and I have spent a lot of time over the last couple of weeks talking about where we're seeing product flow. And what we're seeing from an accumulation standpoint is we're seeing a substantial amount of assets go into shorter term accumulation products, go into products where clients are really trying to navigate through the uncertain time frame that we're in right now. Well, you've got that with the Nassau Growth Annuity 7-year contract surrender, and you can see with the product a 10% penalty-free withdrawal as soon as 30 days after issue. In addition to that 7-year product duration, we also offer a 10-year contract. A little less from a liquidity standpoint. You can see the 5% penalty-free withdrawal, but you have two great optional riders, our Amplified Income or Amplified Income Plus rider. This is a great way for a client, again, who's looking for max accumulation, but potentially also an income need at some point down the road to really try and maximize their upside accumulation potential. And hey, on top of it, take a look at this contract. Back in July 1, we increased the issue age on both our 7 and our 10-year product to age 85. The one caveat to that, with that 10-year product, issue age is 81 to 85, you're not able to elect that Amplified Income Plus rider. But let's quickly highlight some of the benefits that you have with the Nassau Growth Annuity. First and foremost, on the 7-year product. You can see we already talked about it, liquidity. Very strong liquidity with the product, up to 10% penalty-free without as soon as 30 days after issue. In addition to that, a great accumulation potential, and we're going to break down the power of the Smart Passage Index, our vol control index inside of this product in another couple slides. But look at the upside potential you have with this product, up to 106% participation rate on a 7-year product. On top of that, a low vol index with a very strong 16.5% volatility target. And a lot of times when you see with these vol target strategies, they credit interest on, or they calculate interest on a monthly basis, and you're going to see monthly caps. But with the Smart Passage Index, there is no monthly cap with that strong 16.5% vol target. And in addition, one of the other great differentiators that you see is sort of the index exposure rate. The index, and we're going to, again, break this down to show you what the impact is to a potential client inside of this index. But it ranges anywhere from 0 to 350%. So you, again, have a great opportunity for maximum accumulation with the Nassau Growth Annuity. We talked about issuing through age 85, and in addition to that, every product that we issue, either 7 or 10-year duration, we're going to talk about some optional fees, some enhanced participation rate strategies where there's going to be a fee involved. If your client elected one of those strategies, and at the end of the day, the index didn't perform the way that we expected or anticipated that it would, at the end of 7 or 10 years or at death, if that fee ended up eating away at principal, your client knows they're going to get return of that fee, return of that impact that pulled down the principal, to know that they're never going to get less than what they put into the contract. Quickly on the 10-year product, a lot of the same features we mentioned on the slide before previously. Is liquidity a little bit different. So you've got the 5% penalty free out as soon as 30 days after issue. But the real differentiator or flexibility that you have with this contract is the opportunity to attach two different optional income riders. One a low cost of 25 basis points, one a higher cost with 95 basis points that has some built-in guarantees. So let's break things down a little bit more and really show you the power that the sizzle that this product provides, why we're seeing momentum build sort of week by week with the growth annuity as we continue to market it and get out in front of it. First, from an availability standpoint, you do see currently we've got 44 states available. We did anticipate by the end of June, end of second quarter, that we would have had California, Massachusetts, New Jersey, and Minnesota approved Again, unfortunately, due to COVID, the pandemic, the product approval process has sort of dragged out with offices being closed, amount of people in there. So it's taken a little bit longer. We still anticipate getting these products approved this year, but no, they're currently not there. The sizzle, what's driving the success, the sales inside of the growth annuity? Again, that's the accumulation product built inside of that index annuity protection. You can see we highlighted already in our 10-year Group A states. You see where the 1 year, 2 year S&P strategies sit. We've got 1 year fixed account, 1 year S&P cap up to 4.5%, 1 year S&P par rate, 2 year S&P par rate, all base par rates, no cap, no spread, no fee. Anywhere you see that enhanced par rate with a strategy fee, what we're doing is anytime you have a client with funds allocated to one of those strategies, it's a 1% annual fee to the funds that are allocated inside of that strategy. They have the ability to reallocate each and every contract anniversary, moving in and out between any of these different 8 buckets. But what that 1% fee does is it goes into the option budget, and it allows us to provide a higher participation rate for the assets that are allocated to that strategy. And now getting in at a potentially discounted rate is a great time to be potentially thinking about allocating a portion of assets into those enhanced strategy fees. But what we really want to highlight, we all understand the S&P 500. We understand how these crediting strategies work. What I want to do is highlight this Smart Passage Index. You can see on the 10-year strategy, we've got up to a 128% participation rate. Base rate sits at 90%, no cap, no spread, does come with a 1% or no fee. For that 1% fee, we can bump that par rate up to 128%. You can see on the 7-year product, you've got up to 106% par rate with a 1% fee, or a 67% base par rate, no cap, no spread, no fee. So very, very strong accumulation strategy opportunity here inside the growth annuity. But what is the Smart Passage Index? What's the goal of this index? It was designed with the idea of keeping pace and at times even outperforming the S&P 500. So how do we do that? How do we build a strategy that has that type of goal? Well, what we did is identified what we call the low volatility phenomenon. And if you look over time, low volatile stocks generally outperform higher volatility stocks. So to take that concept and to keep it S&P 500 focused, how we built the Smart Passage Index was by picking the 200 least volatile stocks inside of the S&P 500. Once those 200 stocks are identified, they're then inversely ranked 1 to 200, with 1 being the least volatile of the 200. And that then receives the highest percentage of asset allocation. So it's really going all in on that low volatility phenomenon. From there, then we target a 16.5% volatility target, the highest as far as I'm aware of in the industry today. And what that volatility target does is it really tells the client how much access they have to the index that we're tracking. When you look industry, I would say the range is generally between 5 and 8% where we see volatility targets. In a volatile market, once that vol target is met, what you see is those assets are no longer tracking the index that it's following. By having that 16.5% vol target, you have much longer access or much longer tracking of the index that we're following. From there, then we talked about that exposure ratio, if you will. And you can see the index exposure with the Smart Passage Index ranges anywhere between 0 and 350%. And here you can actually see that we have been as high as 350% on a fairly frequent basis. And what does that mean? Here's another way to look at it. Again, what we're doing is we're tracking to a 16.5% vol target. Let's say volatility in the open markets dropped to 8.25%, so half of that vol target that we're shooting for. Well, at that point in time, a client's exposure to the index that we're tracking would double to 200%. So now they're tracking that index at 2 times the returns. If volatility increased to 33%, so double that 16.5% vol target, then what we do is we decrease the client's exposure to the index that we're tracking. And in this scenario, it would drop to 50%. Again, what this should do, if we think about markets that are increasing, and 2020 has been sort of an anomaly in terms of the way things have done, but your average market in terms of long-term planning, when we see markets increasing, generally what happens is volatility comes down. Well, the mechanisms built inside of the Smart Passage Index at that point in time would increase the exposure the client has to that index, maximizing their upside opportunity, the upside returns that they have. And take a look at just some of the raw data that you see, comparing the Smart Passage Index to the S&P 500. Again, this is calendar year. This is not taking in any crediting rates, crediting strategies, or crediting rules. But take a look, 2019, S&P versus Smart Passage Index, pretty much neck and neck. 2018, a down year, but again, still neck and neck. And the strength with the Smart Passage Index, again, it's built inside of an FIA. So we know we have that downside protection. Take a look at 2017, though. Low vol stocks had a great year. The Smart Passage Index returned up over 46% compared to just under 20% inside of the S&P 500. And it flipped a little bit in 2016. But what you do is, again, you get the idea. With this index and the design, you're really giving your client the opportunity to shoot for maximum accumulation potential. And here you can see on the 7-year product, again, over its most recent 10-year period, its return on average 7.8%. In its best 10-year period, return nearly 10.5%. Again, that's focused with a 106% participation rate. So maximum accumulation potential inside the growth annuity is really what you've got. Now I'm going to take two or three quick slides. I want to highlight the 10-year product. This, again, has the ability to offer up to 128% participation rate. But what we see with this 10-year product is a lot of individuals electing our base amplified income rider. This is a way to attach a low-cost, income-driven benefit to the contract. So you can see the amplified income rider charges only 0.25% or 25 basis points on an annual basis. And for that, what it does is it then attaches an income account or benefit base. And the benefit base is going to grow at 150% of index credits. So again, think about that base par rate inside of inside of the Smart Passage Index. You've seen the power of that index. Base par rate, no cap, no spread, no fee of 90%. If then we attach this low-cost income rider, we now only have an annual fee of 0.25%. And that benefit base is going to grow at 150% of index credits, which are being credited at a 90% par rate. A very strong income potential, and you can see that on the illustrative capabilities with this product, how it's done over the last, most recent, and worst 10-year period. You can see income ranging anywhere from $17,000 to roughly $23,000, $24,000. Very, very strong upside opportunity with the Smart Passage Index and the overall design of that contract. Here you see the amplified income. This is our low-cost rider. Again, that 15-year roll-up. Again, you can see the income perspective. After 15 years, over $36,000 in lifetime income would be guaranteed for that client. That, again, is the strength of this growth annuity, the opportunity that this product provides. And again, I'm going to highlight here in a couple minutes the way that I have producers successfully positioning this product. And I wanted to go into a little bit more detail with the growth annuity because it is a newer product. We're seeing momentum build with this product as we continue to market this out and show you the strength of the contract. But let's quickly take 2 or 3 minutes, and I want to highlight sort of for your bearish clients the guaranteed products. We continue to offer the flagship product inside of our portfolio, the Nassau Personal Income Annuity. This is a product that was designed for a client who has a bucket of assets that they know they're using for guaranteed lifetime income. So what we're seeing, personal income annuity, once you uncover the goal of the client is lifetime income. The only question you ask at that point is when. When are you going to when are you going to transition to that distribution phase? If it's within the first 3 years after issue, we're going to elect the income today rider. That income today rider is going to give your client an immediate 30% bonus to their benefit base. If they were to turn on income immediately and they have the flexibility to take income as soon as 30 days after issue, it would be based off of their premium plus that 30% bonus. If they deferred one contract anniversary, we had another 7.5% bonus to the benefit base. And if they deferred 2 contract anniversaries or 24 months, we had another 7.5% bonus, giving them a full 45% bonus guaranteed to their benefit base. If they have a little longer deferral, that's where we're going to elect the income tomorrow rider. And here, instead of getting a big upfront bonus, what we're going to do is grow your client's benefit base at a guaranteed 14% simple per year for up to 10 years or until you elect to turn on that lifetime income rider, whichever comes first. Peace of mind, flexibility, again, the ability to take income as soon as 30 days after issue, and the opportunity to do joint payouts on qualified dollars. Now let's transition to another growing product inside of our portfolio. We have seen sales in this product substantially increase really since the pandemic. And I'm going to highlight, again, when we talk about ways that I have advisors successfully positioning these products, I'm going to highlight some ways that they're using this contract. But the great thing about this product is it's again, sort of, if you recall up front, I said sort of the Swiss Army knife of index annuities. You're going to provide a competitive lifetime income, as well as enhancements for nursing home or in-home care stays, as well as the opportunity to attach a lump sum death benefit. Now, again, high level, again, the great team at IAMS is able to walk through, put together some specific customized illustrations for you, do some case design. High level, same income today, income tomorrow rider that you had with personal income annuity. Up to 45% benefit-based bonus with the income today, or 14% guaranteed roll-up with the income tomorrow rider. The difference is the payout factors are reduced generally around 3 to 5% versus what you get with personal income annuity. But once you've elected your time horizon of today or tomorrow, you now have the opportunity to attach our care protection benefit, or a guaranteed enhanced benefit for care. What this does is if your client were to go into a nursing home, Nassau is going to increase the guaranteed annual lifetime income amount that they're receiving, or they would receive at that point in time, by up to 250%. And we're going to pay that benefit directly to your client, and we're going to pay it for up to 5 years as long as they continue to qualify, even if the account value is depleted to zero. Maybe your client doesn't go into a nursing home, but they're not able to fill 2 of 6 ADLs, and they need in-home care. That can be from a family member, a qualified care practitioner, whoever it may be. At that point in time, we're going to increase that guaranteed annual lifetime income the client is receiving by up to 175%. Again, payable directly to your client, payable for up to 5 years as long as they continue to qualify, even if the account value depletes to zero. And I continue to stress that even if the account value depletes to zero, because it's a huge differentiator with the Nassau product. As far as I'm aware of, we're only one of 2 carriers that pay this benefit once the account value depletes to zero. And why that's important. We all know, when's the average critical care stay start? It doesn't generally happen when a client's 60, 65, 70 years old. It happens when they're in their late 70s, in their 80s, when they've probably they've been accessing the account, so it's a depleted value. The other great differentiator is that this rider is transferable. And what I mean by that, in a joint contract situation, let's say spouse one goes into a nursing home, is in a nursing home for 2 years, receives that 250% enhancement. After 2 years, spouse one passes away. Spouse two keeps the contract in force, and 10 years down the road, spouse two goes into a nursing home. There's still 3 years remaining on that benefit that they would then have access to. A great value, great peace of mind to ensure they get the protection and coverage that they need without depleting the asset, ensuring they have income at some point down the road. Last but not least is our family protection benefit, our enhanced death benefit. Here, if your client elects this rider, we're going to grow their premium at 10% simple through age 70, 5% simple 71 to 85 for a max of 10 years until the client turns 85, whichever comes first. The great benefit with this feature is that this enhanced lump sum death benefit pays in a full lump sum to the beneficiary. Peace of mind, protection. We've covered a lot of different risks, a lot of different needs, all inside of one product with one premium and no underwriting that you're typically used to with products that provide these types of benefits. So before we get into the full case study of the way that these products are being used, let me give you a quick case study or case design of how I have a couple advisors using this product. This is sort of a storyboard presentation in terms of how this advisor does this. Let's say we've got a couple age 65. They have $250,000 premium that they're looking to transition into income when they turn age 70. But as you sat down with this prospect, what we uncovered is the pandemic has elevated their concerns for post-hospital care and the need for increased care, but they need to make sure that $250,000 can provide some sort of income for as long as at least one of them is living. So here's the way that this advisor positions this product. Again, he positions it as a storyboard. Here we're going to take that $250,000, we drop it into personal protection choice, we elect the income tomorrow rider, or we're going to grow that $250,000 at 14% simple for 5 years. At age 70, we turn on a joint payout of $16,575 in income, and we pay that to you, Mr. and Mrs. Client, for 11 years, or totaling over $182,000 in guaranteed income. At age 81, spouse one goes into a hospital because of a medical situation, is released a couple months later. But unfortunately with that situation, is no longer able to fulfill 2 of 6 ADLs and needs in-home care. Instead of taking what was remaining in that account to help offset some of that care, what Nassau does is we increase that $16,575 to over $29,000 in benefit, and we pay it directly to that couple for 3 years, or over $87,000 in guaranteed income. At age 84, unfortunately, spouse 1 passes away. Spouse 2 keeps the contract in force and reverts back to that $16,575 and receives it for another 7 years, or over $116,000 in guaranteed income. At 91, spouse 2 has some medical challenges, needs in-home care, so we bump up that $16,575 to over $29,000, and we pay it for an additional 2 years because that's what was remaining on that 5-year benefit. So now we've paid again out over another $58,000 in guaranteed income. Spouse 2 lives for another 2 years, so receives that $16,575 or over $33,000 in benefit until, unfortunately, at age 95, spouse 2 passes away. We'll take a look, and this is how the advisor sort of hammers it home. That $250,000 premium that we started with has paid over $476,000 in benefit. And despite the fact that we've paid out nearly 2 times the premium that was put into this contract, you always had the peace of mind of knowing that $16,575 was coming in as long as at least one of you are living. And oh, by the way, if you were to go into a nursing home, instead of bumping it up to $29,000, we're going to bump it up to over $41,438. Not to mention, at age 70, if unfortunately you were to both prematurely pass away, because we had attached that lump sum enhanced death benefit, that $250,000 had grown to a guaranteed $375,000 that would be payable in a lump sum to your beneficiary. That's peace of mind. That's flexibility. That's what you've got with the personal protection choice. We have some great customized, fillable drip marketing pieces that walk through the benefits, but really at the end of the day, what this product allows you to do is separate yourself from the competition. Provide benefits, provide value from a product standpoint that does a lot of different things all inside of one vehicle. Now, let me quickly highlight, I know we're running a little long from a time perspective, but I want to show you how I have advisors successfully positioning products, especially on the guaranteed basis. You know, from an accumulation standpoint, we know what we're trying to accomplish. We're looking for vehicles that give you maximum upside potential without that market volatility or market risk. And hopefully you saw that with the design of that Smart Passage Index. But first and foremost, when you start looking at the guaranteed products, I've got some advisors that are using personal income annuity and personal protection choice, and because of that industry-leading 14% roll-up, they're designing the payout structure and positioning it as a cost of living increase. So we have a client that has a need for income almost immediately, but instead of electing the income today rider, what they do is they elect the income tomorrow rider, or that 14% roll-up. And they use the flexibility of the product to get income out as soon as 30 days after issue, but they use that through the penalty-free withdrawal of up to 10%. So what that agent does is sets up a customized illustration and says, look, year 1, you need income. What we're going to do is we're going to draw out 3.5%, 4%. Now, why we withdraw that 3 to 4%, whatever that number may be that we settle upon, our income account is going to grow at 14% guaranteed less that withdrawal. Then year 2, we increase that 3%, 3.5%, 4.5%. We increase it 50 basis points. We increase it a full percent. And we take that withdrawal through the penalty-free withdrawal. We continue to grow that benefit base at 14%, and so on and so forth for several years until we get to a point where now we turn on that guaranteed annual lifetime income rider. So it's sort of operating as a cost of living increase for the first several years. Another way, opening up some opportunity for some younger clients who might be out of a job, who might be furloughed, but need some access to income. Well, what if we can utilize the guarantees in this product and start positioning an earlier withdrawal using a 72T or 72Q? So we know we need to do substantial equal periodic payments for up to 5 years or till the client turns 59 and a half, whichever one is longer. So what we do is, again, we drop that asset into the personal income annuity. We elect that income tomorrow rider or the income today rider, and we either turn on that guaranteed annual lifetime income rider to start providing an income stream, or we use the penalty-free withdrawal to meet the 72T requirement. Another way, what about the CARES Act? And this might be short-term at this point in time. But again, what the CARES Act does is it allows a client to pull up to $100,000 out of their qualified account because of COVID-related concerns. Maybe it's an income perspective. Again, an income need that they have. Then they have up to 3 years to pay that back to defer those taxes, whichever it may be. But what we have some advisors doing is then taking those assets, taking that and putting it back into Nassau growth annuity, personal income annuity, personal protection choice, and getting the guarantees that you have inside of an index annuity and operating sort of as the payback of those assets. What about funding life insurance? We've seen an increase or resurgence in life insurance because of the pandemic concerns. Well, what if we could take an asset, drop it into personal income annuity, and then use that guaranteed annual income to pay in full, to do a 7-pay, whatever it may be, a life insurance policy? Guaranteed income, there's a lot of product, a lot of clients whose position have changed. But some products out there don't allow that client to access that income until some point later down the road. What if we, again, transition some of those assets into a Nassau product that gives you flexibility of income as soon as 30 days after issue, gives you industry-leading benefit-based bonuses or benefit-based roll-ups? And last but not least, and you saw this with the post-hospital stay, you saw that with the case design in terms of how I have some advisors positioning the personal protection choice, leveraging the benefits. And that's the strength that you've got with the Nassau portfolio. I hit it on it up front. The ability to provide a broad range of solutions, the ability to open up to new markets, a younger potential client base that can maybe be with you for years to come down the road. That's what the opportunity that you have right now with the portfolio and the opportunity in front of us. Quickly, we continue. Marcus mentioned their Firelight. Nassau is now on the Firelight system with IAMS. We've got our great e-app. We have an e-delivery process as well, so you no longer have to sit down and deliver a contract to a client. You can set up a virtual meeting once the policy is delivered virtually or electronically and be able to run through the contract. We have That Annuity Show. It's a podcast. It talks about topical ideas. It's a 30-minute podcast that we update on a weekly basis, bringing in industry experts, a way for you to continue to stay on top of things, because maybe, unfortunately, events like the insurance agency marketing, life and annuities meeting aren't able to take place because of COVID. Here's a great way for you to stay on top of the industry and everything that's happening. We have a great free educational course. You can send it. It's client approved. It talks about different courses. What's an index annuity? What's an income rider? How does it work? What's a multi-year guarantee? A resource that you can pass on to clients. I have a lot of advisors using that. And last but not least, I call it our Plan Right, Retire Right brochure. This is a great non-invasive way to start a conversation about retirement planning. Take a look at page 1. Define your goals, both personal and financial. The client then can jot down some information. Talk about risks that are concerned to you. Write down that information. We break down those risks in subsequent pages. But here's a great resource to get to a client via an email. Have them start filling things out, and then you can pick up the phone, set up a virtual meeting, over the phone meeting a week, 2 weeks down the road, and start running through these scenarios, and eventually lead you to positioning an index annuity. But let's wrap things up. For the webinar today. And again, I appreciate each and every one of you taking time to be on the call today. I mentioned it up front. Because of your partnership with Nassau through insurance agency marketing, on top of all the great benefits that IAMS provides, you also have the opportunity to qualify for our Nassau Elite program. I'm going to run through these benefits, and I challenge you to name another carrier that's going to provide all these great benefits for only $1.5 million in FIA sales for the calendar year. And because of the challenges, our understanding of COVID and the challenges of keeping that pipeline filled, for your partnership and for your business, we're going to offer double credits for all business submitted in August and September as long as it issues by year end. But what are the benefits that you get as part of this program? First and foremost, you're going to qualify for a year-end commission bonus. If you achieve at least $1.5 million in qualifying credits, you will get a 50 basis point bonus for your first year qualifying for this program on your entire block of FIA sales for the year. If you do $3 million in FIA sales with Nassau in 2020, in January of 2021, you're going to get a 50 basis point bonus on your entire $3 million in sales. If you're to qualify for 2 consecutive years, we increase that bonus up to 75 basis points. In addition, if you're a top 75 qualifier for the Nassau Elite program, you and a guest will join us in Sonoma, California in April of 2021. We're going to celebrate your successes, spend time with 74 other top producers inside of the Nassau portfolio, and hopefully we'll be talking about, but not experiencing any more challenges as it relates to the pandemic, but our way of saying thank you for your business. In addition to a commission bonus, potential trip, you're also going to qualify for elite level service. You will have a dedicated new business case manager, suitability manager assigned to your business to work with you or somebody in your office. They're going to be responsible for all of your business going forward. It's a great way to build a relationship to make sure that your business continues to move through that system. As I mentioned, for the months of August and September, because of your partnership with Nassau through IAMS, you're going to get double credit on all FIA submits that issue by year end. So in its base scenario, you could qualify for the Nassau Elite program by submitting only $750,000 in premium. That would give you those three great benefits inside of your business. So with that, again, I know I went a little longer than I usually do. I appreciate everybody's patience on the call. I appreciate everything that you're doing out there to continue to talk about index annuities, to continue to help ensure clients' lifestyles throughout their retirement days. It's a great time to be talking about index annuities. I know it's a challenging time to fill that pipeline, but I want to thank you for the opportunity to earn your business. I want to thank you for your business and partnership with Insurance Agency Marketing and with Nassau. So with that, Marcus, I'll kick it back to you to wrap things up, but thank you again for the platform today, and thank you for the opportunity.
Absolutely, Jake. We have one question out here. I got one question from one of our participants. They said, does any of your products offer the baby boomer strategy, or which one would be a best fit for that?
I guess in terms of baby boomer strategy, help me understand, Marcus, what sort of your thoughts around what that fully entails?
I think the baby boomer strategy, and correct me if I'm wrong, is baby boomers are looking for products that are going to leave money to their grandchildren.
Okay.
Is their primary goal from that standpoint, because you're looking at people that are 65 and up. So I mean, either income or money to their kids. So I would say it would be your either your personal protection choice or your growth annuity from that standpoint, if they're looking at just leaving money behind.
Yeah, I would agree with you. And to take that one step further, if you're looking at legacy, personal protection choice has the built-in death benefit rider, right? It grows at up to 10% simple for up to 10 years. Mm-hmm. But the trade-off for that is there is a fee. There's a cost for that. It's 20 basis points for that enhanced death benefit, and it's on top of 95 basis points for the income rider and care rider. So you could be looking at a total of 1.15% in fees, but you're getting that guaranteed death benefit growth. To your point, I would also look at the growth annuity. This is an accumulation-based product. You could set this up so that the product had no fees built into it, and we could really shoot for maximum accumulation, which then you would build, hopefully, as a death benefit, what would pay would be the accumulation value. So it really depends on the comfort level of your clients with fees, of looking at guarantees versus non-guarantee or accumulation growth.
Right. Nursing homes, LTC facilities owning these inside the fixed index annuity?
Well, yep. So you've got, again, PPC has that care benefit, which is going to grow, or it's going to increase the payout if the client were to go into a nursing home, or if they need two of six ADLs, whichever it may be. So it's going to continue to operate as an annuity would.
Okay. Any other questions out there today? I do appreciate your time, Jake. I am going to throw a poll out there real quick here. I do appreciate everyone taking time to listen in today. But if you'd like more information on Nassau Re, please click on the poll. I'd be more than happy to get any additional information out to you after the webinar this morning. I'm not seeing any other questions out there this morning. Jake, I do appreciate your time. I do appreciate everyone's time. I will look forward to following up. Like I said, if you got pulled away for any reason during the presentation this morning, I do have a copy of the webinar. Again, my name's Marcus. You can either reach me directly at the office at 800-255-5055, or you can email me at marcus at IAMSinc.com, and I'd be more than happy to get you a copy of the webinar itself. But I do appreciate everyone's time. Jake, thank you. Great partner with Nassau Re, and we'll look forward to talking to you next time. Thank you. Thanks, Jake.